What? 啊，OK，要吃什么？Right. Sound check. Sound check. Sound check. So welcome to another Sunday weekly outlook. Okay, let's hop on. First of all, let me show you guys there is couple of very high impact news for the upcoming weeks for majority of the currencies especially. Okay, do let me take a screenshot and show you guys. Let me check if you guys can see this. Alright, I think everyone can see it, right? So let me brief to from Monday itself, right? We would like to avoid the yen pairs because the yen's bank's holiday, but the next during London session there is a high impact news for the euro and pounds, and for night we have the PMI for the US dollar. Okay, so PMI for euro, GBP and the US dollar for the Monday. So I expected we turn out there might be have certain volatile. Please trade safe, but if you trade according to the order flow, it should be fine. You should push towards to your direction or your bias. Okay. Coming up Tuesday, there will be a Australian cash rate. It's quite a high impact news. It might spike. I would like to avoid this. Maybe after this, then we'll touch on the Australian dollar. Coming BOJ speaks. It is a very manipulative news, I would say. Okay, because we wouldn't know like what are the speakers are going to say. The Bank of Japan, governments. Okay, coming up on the Tuesday, we tradable on the US dollar. Coming up Wednesday as well, the CAD and the AUD, the Australian dollar and Canadian dollars, and CHF and the US dollar. So there is a POA speaks on the Thursday. Please be careful if you have trades, any trades running on Thursday before 9. I would suggest maybe just secure profits or just avoid it. It would be nice. Even before the unemployment claims, it would be better as well, because we wouldn't know what's the Powell, Uncle Paul will be talking about. Coming up Friday, yes, it is still tradable on the US dollar, the PCE price index, and Canadian dollar. Okay, so basically, I would say for the whole throughout whole weeks, US dollar, the majors can be touched. Maybe until the Wednesday, it also possible. So let's see. Coming up the DXY weekly outlook. So coming weeks, right? It will be the last week. Yes, will be the last week of September. So let's take a look on the Monday. Is our Monday drawn liquidity has taken out? Yes. And the weekly itself, yes, it's already also taken. So coming up next, how do we identify our buyers? So the major draw liquidity already has taken. So the next thing, we need, if we are still bearish on this, we need to make sure all the protected highs are respected without breaking it. Okay, so if we are still bearish on this, we definitely need to wait for the premium levels to continue selling off, unless the protected high for the bearish order flow already broken, then that's the another story. So currently price is still stuck in between, currently is between this range. So whether how we identify our buyers, right, it should be waiting out of this range first, at least minimally these two range, within these two range from the 4-hour time frame. So from 4-hour time frame, sorry, from the daily itself, it looks like a sweep. In the end, the price just sweep the previous candle high and just dump back, continuing lower. But the draw liquidity is here, it's obvious. I don't want it to be broken. I don't want this high to be broken for me to have a continuously bearish order flow. Okay, sorry, excuse me. A protected high, and this will be the draw on liquidity. So how do we trade off to continue lower to reach our target? Let's see on the 1 hour, is there any fair value area? Yes, from the 1 hour of the daily, from the 1 hour, indeed there is a BVR resting right here within this range. Within this range, a tap into this range. At least minimally I want it to break here to continuing lower, something like this. Yes, the premium array, if it break this low on the 15, should look for a sell. This will highly likely going to be a new protected high. Okay, so this range, do let me highlight that we need to take note of. Okay, so this is the major outlook for the DXY. So next, after this range, let me have a screenshot to our premium members. Okay, so next, gold itself, okay, another all-time high for the week, very well done, but it is also quite a hard pair to trade off. So a monthly, there is definitely a monthly fair value gap waiting right here, just a matter of time for it to fill the discount array. So from the weekly itself, it seems close bullish. It could and also be a breakaway, obviously. So this will be the weekly breakaway gap. Okay, so the next thing, potentially there might be another daily fair value gap forming. Potentially looks like this. If the candle itself looks like this, a sting which close below this, I would like to see a continuously lower, something like this. But if the daily candle for Monday, it closed something above this high, with or without a wick on top. If without wick, Tuesday potentially could just sweep this high, a break low to continue lower, or if there is a wick right here, a rejection, we will wait a rejection, a change of character to then continuing higher, a BPR at a lower time frame. Yeah, this would be a multiple scenario, but without a doubt it is extremely bullish on this pair. So if whoever wanted to short it, please be really careful. So from the 4-hour time frame, I do see a very high potential setup right here, on here, protected low right here, a fair value area right here, all the way target to another high if this fail to break higher. So this will be the first setup that I will be looking for. So since I'm still bearish on it, I am still bullish on the rest of the majors, especially gold itself, very well done on the all-time high. Next, okay, our previous month high target already has been met. Our next target will definitely be this high. There might be a potential another breakaway gap right here as well. Sorry, it is a potential BPR right here. So this will be the next draw on liquidity high. Coming up next will be this until all the way to here. Very well, there is a daily fair value gap respected right here. To then continue aiming higher all the way to here. A 4-hour also respected. This seems like a equal low to me, this range. Either two things, price either respecting this sting candle, a sweep of this, or it could just sweep this low to then continuing higher. So pretty much this is first of all, let me take a screenshot of gold. bullish. Australian dollar also bullish as well. Next, coming up next, the euro. Our monthly high target has not been met yet. Previous month high has not been met, so this will be our draw on liquidity. So how do we manage to get to this draw on liquidity, eventually to this high as well, this swing high? So let's see. The weekly fair value gap has been respected. Weekly fair value gap has been respected very well. A posting and push up, I assume. In the daily time frame, daily fair value gap has been respected as well, right here. So the next thing, it should just push up higher from the 4-hour or the 1-hour time frame. So let's see. This could be decent, but I don't like how it range within this range. I think this is the FOMC. Yeah, I think this is the rate cut effect. So within this range, right, I would like to see a more clear direction right here. Okay, a protected low form off here. This actually could just straight away just open high, a break, then continuing higher. Yes, at least break of this high. A break here is draw on liquidity. Next, pound. Okay, from the monthly time frame, yes, the monthly target has been met. Okay, the weekly fair value area, very nice. So this is no doubt with a bullish structure. Next, going to be this weekly fair value gap to be filled. Weekly fair value gap, and eventually is this high. So next, what is this? Previous monthly high. That's the drawn liquidity. On a daily time frame, looks like a day equal low right here, but I am not convinced that price will return all the way down here. Let's see. Okay, the 4-hour order flow is very nicely respected right here, and a sweep of this low and rejected off, continuing higher. Let me check on a minute. Okay, price actually should just respected off here with this protected low, targeting all the way. It could be a swing trade, or you can do a trade something like this. Something like this. So this is the GBP USD, saying bullish on it. New Zealand dollar. Okay, the price did after the major draw liquidity, the price did rejected off a bit instead of continuing lower from the previous week, the week before the previous last week. So the price just respected off this weekly fair value area very nicely. Targeting next will be no doubt on this, eventually to this. So we have our buyers right now. Next will be our how do we get involved in. Okay, so what's the story about it? The price respected off this weekly fair value area very nicely. A daily, I don't think there is a daily fair value gap form. Okay, from a daily standpoint, there is nothing. The 4-hour time frame. Okay, the 4-hour fair value gap instead push off lower, but eventually it broke this protected high. So from this point of view, it should be just continuing pushing higher the moment this high was broken. So from 4-hour time frame, the range is still here, in here and here. I want it to respected the bullish order flow to continuing higher, but it seems like a swing failure right here. And SMT, but I am, no matter how, I am still bullish on this pair. Maybe you can do a trade something like this, first off here to here, or you want to be safe. If you want to be safe, you can do something like this, something like this. The RR is not that nice, about 1 to 7 is compared to this about 4.67. Can either do two things. If this close high, close this range high, you could just enter off here to then continue higher, something like this. So from the US dollar against the Canadian dollar, has our monthly target been met yet? I don't think so. So this will be the monthly target. Weekly target, and eventually is this low. It seems like a BPR that price could continue higher. So there is potential a new range form. Before this new range form, I don't think I have any bias on the weekly. Yeah, from the weekly time frame, daily time frame, if I am bearish on the US dollar, this could just sweep a respect of the higher, the daily time frame fair value gap. Daily time frame fair value gap to respected and it should just continuing lower. If the lower time frame about 1 to 4 hour, there is a clear indication which is a bearish fair value gap. Let me check. Yes, there is a 4-hour fair value gap bearish right here. What I want to see is the price could just close below here, another retest candle to continuing lower. I want it to be formed at least here, at least a break of this low. But RR would not be nice. Yes, I want it to break at least this low. Break this low. Yes, I want something like this to form. It seems like from the 4-hour time frame, it looks like a sell model as well, especially the Feds are cutting the rates. They could be buying back more on the Canadian dollars, highly likely, or a very high potential. This could be a protected high. This could be another protected high as well. If both this high has broken, it could just continue respect these levels to continue all the way up here. So but I still believe the bearishness of the dollar itself. So this is the USD Canadian bearish, and the USD JPY. The major draw liquidity has already taken, so you see how the price reacted off. The price just sting into a major high. From the daily time frame, a daily fair value gap, but it seems like a reversal to me. The same thing as the US dollar against the Canadian. Somehow it is at a discount zone as well. Yes, it has 62 point at the OTE levels. This will be the daily fair value gap respected of. I would like to see the next thing is a 1 hour BPR to show me the intention of the price is rejecting continuously lower. Is there any bearish fair value gap off here? Let me check on 4 hour. It looks like a sweep. Yes, it looks like a sweep to me, but just for safety, I would like to see from the 1 hour or the 4 hour time frame, the swing low has been broken. Break here, then all the way sell to here. Yes, break here, retest, to then continue lower to start off the sell model from the 1 hour time frame. So I am bearish on this. So the yen pairs, yes, avoid the yen pairs on the Monday I mentioned earlier, because the holiday of Bank of Japan. So let me see. Okay, the major draw liquidity has already taken out as mentioned and as forecast. So what is the next thing that I will be looking for? This protector low should be still holding. This high has already taken, this high already taken, so let's delete it. So the next draw liquidity seems like price is pointing downward to fill in this gap from the start of the week, from the last week. Yeah, The bearish order flow is still holding very strongly. Price could just sting in to continue lower all the way to at least this swing low as from the daily fair value gap as the draw on liquidity. So from this low to this high is our draw on liquidity down there in the OTE level. Yes, that is very good, which is a good sign that we could just buy off from here. But you can't buy the yen futures, of course. But what you can do, at least you have a bias that yen could continuing lower, whereby the rest of the forex currency, the foreign currency, will continue pumping higher against the yen pairs only. So you have the bias right now. I would like to see the following things is something like this. A sting in respect of the bearish, a continuously continuing lower, sting in, and Bank of Japan on the Thursday, right? There will be a Bank of Japan speak, be it Wednesday or Thursday. I check back, coming back, a sting in, rejection of, a pump higher all the way to the upside. So the first half of the week, I would assume right here. Then the second half of the week will be the expansion phase until the closure of the monthly candle itself. This is what I see. So let me second half of the week. Of the week. So this is the first half. Maybe until here. Yeah, at least this high or this high. So currently we still at the bearish side, don't forget. So this is the yen basket. Bearish until daily fair value gap to and wait for rejection for the bullish strength of yen. But if the price didn't respect this protected low, it could just do something like this, a fail to break higher, a sweep to continue lower. It could be something like this as well. Okay, so for the yen pairs, yes, extremely bullish against the yen, no doubt. Until where? At least this high, I would say, because of the major draw on liquidity has already taken out. So this will be the next destination that price would aiming to. So from the weekly, we have the bias right now. So how do we get involved in is, I would like to see a fair value area respecting right here, but the price just respected this 4-hour fair value gap. Okay, very nice. But from the 15-minute time frame, after respecting the 4-hour fair value gap, right, the price failed to expansion of higher. Potentially could be a liquidity building right here that I can see. So price can do one more thing is, this is from the daily, is it from the, oh yeah, this is from the 4-hour time frame. Yes, this low could be a fake sting or sweep if the price fail to break higher. So if the price fail to break higher, even though if this high fail to break and form a sweep instead, the price could just take out this low to continue lower all the way to the 4-hour fair value area, coming back to then continue higher, or price could just break above to then continue higher. I wouldn't be surprised as well if the price goes another way, either way, because a sweep, then it will feel the offer the fair going to offer the fair value. But if the price decide to break, it could just be a breakaway retest and then targeting these weekly buyers draw on liquidity. Okay, so this is okay. So for the rest of the yen pairs is also the same thing. The major draw on liquidity right here, the monthly fair value gap resting right here. So the price is has been magnetized towards to this draw on liquidity. So this is our buyers, and the same thing will be respecting the discount areas right here from this zone, respecting to then continuing higher. It will be looks like the same for the rest of the yen pairs against the yen pairs, exactly the same. For CHF, yes, exactly the same. This could be decent. Protected high, a swing high, targeting this weekly, yes, this weekly high. Looks like a sell model as well from the weekly time frame. Let's see how the CHF news for the coming weeks. Let's wait after maybe Tuesday, then we reanalyze on this. Let me highlight on this because it could just potentially weekly sell model from here, then bearish for the rest of the fourth quarter. Yes, the fourth quarter of 2024. Potentially it could just, oh, it is a sweep of major draw on liquidity. It is a sweep of major draw on liquidity. That's why there is a huge rejection right here. From the monthly time frame is also a bullish ones. Then this will be the draw on liquidity at this high, eventually to this high as well. Then it will be forming another all-time high. Okay. Yes. I think that's about eat a major draw liquidity sweep. This will be another high. New Zealand dollar against the so, yes, it will be the same. Okay, so that's about it for the major gold and the yen pairs. So any question, we do have a Q&A session after the fundamental, the basic of fundamentals, how I read the candlesticks especially. Coming up next will be the candlesticks, the basic of technical analysis, something like the market structure and the PD arrays. So I'll be right back. So welcome back, boys. So first thing I'm going to say is I will be touching on the fundamentals. Okay, the fundamentals that I mentioned earlier is the about the news. Fundamentals, economics, calendar. Next, technical analysis. Okay, so the technical analysis is something like how I'm doing the analysis of the charts, how I understand the candlestick reading especially. So the first thing you need to know from the technical analysis itself is the candlestick, of course. The candlesticks. Second will be the market structure. Then the PD array. So what are premium, discount, array? So how you are going to unit it? Coming up next, they'll definitely have a lot of things to touch on, but currently from the basics itself, I will touch on the candlestick first. So in candlestick, there is only two kind of candlestick. There is a bullish one and the bearish one, of course. But in the candlestick body, right, there is the open of the body, the close of the body, the high of it, and the low of it. Okay, so how do we identify it? So let's zoom in on this. So from this, let me show you a good example. Okay, maybe right here. So you can see there, from the bullish candle, this whole stretch is the bullish candle. Okay, take note. This is a bullish candle, So in a bullish candle, there is a open of the candle, the close of the candle, the high of the candle, and the low of the candle. So now we know this is how a candle body form. Okay, a body candle form, it requires a open, low, a open, an open, low, high, close. All right. So if a bearish candle, same thing goes to a bearish one. It requires a open, high, low, close candle. Okay, so this is the example of the bullish candle, as you can see right here. So the next thing, let me give you an example of the bearish candle. Give me a second. Let me find a good one, good bearish one. Yes, maybe this one. So from here, a bearish one. Remember what I just mentioned? A bearish candle, the open will be the top of it because the close is the previous one. Okay, from this previous one, the bearish candle closed below, right? The next will be open right beside it. So this is the open. This is the open. Open high, and then low, then the candle closure, close. Let me make it at the side. So now you can see okay. So in a bearish candle, you will see how the bearish candle form is the price close here from previously. In the end, the price just opened here, went to the high, and dump lower, dump all the way low right here. Eventually, the price decide to close here. So this is the range of the body candle. So the next thing is, so now you know how the candlestick form. A bullish candle required a open, low, high, close, and oppositely, the bearish one will be the open, high, low, close candle. So the next thing, now you know the candlestick. So what does a candlestick represent about? You can see the volume from the single candlestick, and it will tell you a lot of story. Always remember this, which is the wick does the damage, the body tell its story. Okay, so how do we identify it is a high volume or a low volume? All these candle form are formed from the volume itself. Okay, you can see there is multiple kind of volume forming. So from here, there is a very good example right here. From this candle, you did see a very strong bearish momentum right here. Eventually, the low of the price failed to close below it, which means the price has respecting this discount array. So every swing highs and swing lows, there is a premium and discount array. So when there is a bearish momentum, you will look for a premium zone to continue sell off. Same things goes to the bullish buyers. It requires a discount to continuing higher. Okay, so I will touch on the market structure at first, then we touch on the premium and discount array. So how does a market structure looks like? There is three kind of market structure. There is let me show you this. From the buy and sell, buyer and seller in the market. Volume, okay, candlestick tells the wick does the damage, and body tells the story. Candlestick is telling you the volume or the momentum of telling you the bullish or the bearish of it. Okay, so the next thing I will be touching on will be the market structure. So in market structure there will be three kind of market structure. So there is a bullish one, next will be a bearish, and a consolidation or ranging. So in a bullish market structure, how does it looks like? Okay, let me touch on this first. Consolidation, bullish, then bearish. Okay, so from so let me right now, this is touch on about market structure. So this is the market structure. It does have three kind of market structure: a consolidation or ranging, which is you can see very obviously the price is ping pong from the previous high, previous low, the previous high, previous low, ranging something like this. Okay, which identify as no clear direction. Or the intention or bullish or bearish. Okay, so the second thing, how does a bullish market structure looks like? It will be a break above, so this is the low, high, low, high, higher low, higher high, and then a higher low, and then a higher high. So this will be a high, this is the low, high, this is a higher low, higher low, and this will be a higher high. So in order price just continuing bullish, it should looks like a higher low, higher high. In advance, I will teach you more about it. If the price or the market will never show you a very clean exactly like this, but let it make it simple first from the concept itself. I will just briefly explain from this to you. Okay, so how does a bullish intention show you? It requires price to continuously break the previous high. Okay, so same thing goes to the bearish ones. It require a high, a low, a lower high, but not breaking this high, a lower low, a higher low, a lower high, and then a lower low, and the same things goes on. So this you have the high itself, the high, the low, okay, and this will be the lower high. This will be the lower low. Okay, so in order price need to respect the a bearish order, my English. Okay, so in order price has to be bearish, it requires price to continuously breaking the previous low. So from here You can see, yes, you can see here there is a high form, a low form, the price continuing higher but failed to break this high at first, then decided to break the low instead to continue lower. The price retested the previous low and then but didn't break the high to then continuing lower, eventually until the draw liquidity. So this is the market structure showing. So now let's dive into the live chart. Let me show you guys how does it looks like. So from the live chart, let me show you on the 50-minute itself. Okay. So price. So from the market structure itself, you can see a bearish one. You can see from here to here. At first, this was the bullish market structure at first. So how the bullish looks like? There is a low, there is a high, created a lower low, eventually breaking this high, and then form another higher low to then form the another high. So this was the bullish market structure previously. So the next thing, price decided to fail to break this high, eventually price just created a new low right here, which breaking this, where the price break the previous low right here from the line right here. Okay, the moment price decided to break this low, which means a respected, but this pump, it could be a sweep, just only a sweep of this low to then continue higher, but the price decided to close below again, then continuously bearish right here, continuously bearish right here, and new low form, but the price decide to ranging in this zone, eventually the price ranging in this zone fail to find a new direction. So from here, we definitely need to stay out of the market. So from here, how do you identify when is the consolidation? How do you know coming up next will be a consolidation or a bullish or a bearish, right? Okay, so you have this, a bullish one, a bearish one, a consolidation, and then continuously bullish. Okay, so every single time you need to identify is, and to avoid is the consolidation period or the range. Okay, the consolidation period, right, it will cost you a lot, because where the price is not in a clear direction for you to trade off. So how do you identify a consolidation whereby a range, the price just trade within the range, the price just hovering around the range until it show you a true direction, a break above and closure with a high momentum, leaving something like this, a momentum like this, the like this. Okay, the price decided to sweep a break continuously below with a fair value gap right here. What is fair value gap? Coming up lesson I will arrange, then we'll talk more about fair value gaps. It will be including in the what they call the PD array, the premium and discount array. It will contain a lot of educational stuff especially, but before that you will need to know about the market structure first. Okay, so from the market structure, it requires a true direction leaving with a fair value gap. Okay, but the price, after the price did not even sting in but decided to close above this candle. So which means this fair value gap opposing each other, the forming of this fair value gap, it is a sign of reversal. As you can see, it will exactly looks the same like this. The price respected the discount array to then continuing higher to all the way this high as the draw on liquidity. So for less confusing, you just need to remember this. Okay, you just need to remember this. A market structure is about a consolidation range, or a ranging, we call a bullish one, a bullish market structure, and a bearish market structure. Okay, so coming up next will be the PD arrays. So from the PD arrays, right, so on the market structure, so there is a consolidation, or ranging, where price fail to show you the intention of the bullish or the bearish side. Both previous high and low taken out. Second, bullish market structure is where price continuously breaking previous high without breaking previous low, or without breaking previous low. So the same thing goes to bearish market structure. The bearish market structure where price continuously breaking previous low without breaking previous high. Money. Okay, so coming up next will be the premium and discount array, but I will just let you guys know what are PD arrays first. What are the things inside the PD arrays? Okay, so every single market structure inside itself, there is a premium and the discount. Remember what I mentioned earlier? Without breaking the previous low, what do I mean by break is the candle close below it. So I won't be touching all of these today, but I will just show you guys this, what is in the premium and discount array. So in a premium, you would like to, if your bias is sell, you are required or you want to sell in the premium price. Am I correct? Am I right? Okay, so from the most premium that you can sell off is the old highs and low. Coming up next will be the rejection block, following by bearish order blocks, liquidity void, the volume imbalances, the fair value gaps, the breaker blocks, and the mitigation blocks. Then when the price is in the equilibrium, where the price stuck in between the premium and discounts array, price tends to consolidation more in the equilibrium price. Again, where the price stuck in premium and discount array, it will be tends to happen a consolidation. So the same thing goes to the discounts array. So the most discount that you can buy off is the previous or the old low or the old lows or highs. Give me a second. I think there is a typo right here. Old lows, the most lows. Yeah, I think there is a old lows or highs. Old lows. Yeah. The most discount area you can buy off is the old or previous the low. Okay, previous low. I would say it's a previous low. Okay, so the next thing is the rejection blocks, the same as the premium itself. Then the order blocks, the fair value gaps, liquidity voids, and the breaker block and the mitigation blocks. So the mainly focus, I would focus on the next lessons. I will focus on these I will touch on more about these breaker blocks, fair value gaps, order block, highs and low. Okay, these are the key criteria that I will be trading and use most of the time, of course. Okay. Okay, so coming up next will be my stream will be on the Tuesday and Wednesday. I'll be touching here and there a bit on the PD arrays because there is a lot of to be touched on. Maybe we start from the previous old highs and low and the order blocks, and maybe the fair value gaps. Let's see how the time is out. So I hope you guys have a very fruitful lessons from the weekly outlook and the basic fundamentals from the candlesticks to the market structure until the PD array itself. I hope it will help you guys a lot, and I'll see you guys soon. Goodbye.